Hey everybody, we're looking at a tweet here out of Reuters, and they describe this plunge in consumer spending as unexpected. Let's take a quick listen to this news clip.
American consumers spent less at stores last month. U.S. retail sales unexpectedly stalled in April as a boost from stimulus checks faded.
So here we go again, right? The use of the word unexpectedly stalled. We'll go ahead and go to this chart right here. And this is out of Yahoo Finance. They're even calling this a downside surprise. Well, it should be no surprise. Take a look at previous rounds of stimulus checks and then the uptick in spending after the stimulus checks are sent out. Here's the first round. You see the huge spike here with the blue bars here. The second round, big spike. Third round, big spike. And now, just shortly after the third round, we're already seeing retail sales flatline. Right? So what type of pitiful economy is this where retail sales flatline when we stop sending out stimulus checks? Right? There's no other way for us to go besides monthly stimulus checks. That's the only way they're going to go. Now, that's not the solution. The solution will be free markets. No more payouts, no more multi-trillion-dollar stimulus packages, rescue packages. No more endless amounts of money being printed out of thin air, handed out to first the millionaires and billionaires, multinational mega corporations, and then a trickle down to the people. That would be the solution, but no, that's not going to happen. They're going to keep on sending out more and more stimulus checks, and we're going to continue to see just devastating price increases with, again, more people choosing not to work and just collect the stimulus checks. Companies are going to be pressured into raising their wages to attract workers, and guess what? This is going to, again, cause more rising prices. These businesses, they're going to be raising their wages to get workers to want to show up instead of sitting home collecting checks. They're going to be raising their prices, and whoever is working is going to end up paying for this because you're going to pay higher and higher prices. We also are not seeing manufacturing coming back. We are a consumer-driven economy, and we're being pushed further in that direction. This is an absolute nightmare that's unfolding here, and it's going to continue to show its ugly head. And the problem is most people still don't realize it. They just think that it's all because of the emergence or the unleashing of the great sickness that led us down this path. Now, it definitely accelerated what we're seeing, but we were headed this direction already. But let's go back a little bit further in this chart here. If we look at pre-great sickness, we see that the spending was pretty flat, a little bit up, a little bit down. But now we see the big surges here after stimulus checks are sent out. Right? So incomes actually rose after the great sickness because why? The stimulus checks, they're counting those as income. Right? This is pitiful. It's not a real economy. This doesn't even fit the definition of what an economy should be. It shouldn't just be money printed out of thin air and people going and spending it. Because then as soon as the payouts stop, then you're in big, big trouble. And that's what we're seeing right now in the US. Expect to see more rising prices and eventually more shortages. We're going to talk about the gas shortages here in just a moment because the pipeline did start back up, but we're still seeing a lot of gas stations, especially along the East Coast and in the South, the Southeast US, still dry. And it's going to get to the point where you're going to see riots, shortages, a big uptick in violence and thefts and crime because there's going to be so many people just left absolutely devastated and starving. Right? There's no other way for this to be solved with what's happening right now. So there you have it. This chart says it all. Consumer spending flatlines without stimulus checks. This is a bad situation with so many people dependent on payouts. Now, we talked about the pipeline being shut down a few reports ago. It has since returned back online after a ransom was paid after the cyber attack. But even now, as of today, this is just out today, 90% of gas stations in DC are without fuel, and that's one of the worst situations in that state. But there's many other stations across the southeast United States that are still out of gas even as of today. You see, in just about every aspect of our lives, we are dependent on some sort of system, and the financial system, the monetary system, it's my guess is that in the very near future, we're going to see something drastic happen to that. It's going to go out. It's going to go dark. They're going to say maybe it's a cyber attack. Banks will shut down. no money for you, and all the people that swipe their cards in order to just get by on a day-to-day basis are going to be left hungry. And then you're really going to see the nightmare unfold. It's going to be more noticeable. Now, we last checked in on the gas price a few episodes ago, so let's check it today. We're now up to $3.04 per gallon. That's the national average. But Gas Buddy lets us sort this by region. So let's go ahead and take a look here on the West Coast. Let's just pick here my area, San Diego. And that should give us a red line up on this graph. Let's take a look. And we see that we're averaging now well over $4. You have to look around to find it for less than $4 a gallon. So yeah, I know. Go ahead and say it, JJ. Why are you still in California? Get out of there. Well, there's a lot of reasons. It's a long story, but it has to do with family and medical facilities. When you have a disabled son that has a lot of medical needs, you want to stick close to, in my opinion, one of the best hospitals in the country for children, and that's Rady's Children's Hospital. But another story for another day. There's other reasons why I'm still here in California, but we'll get into that more in more detail later on. And a lot of articles recently about a fourth stimulus check. Right now, it's just all speculation. There's still lawmakers pushing for reoccurring and monthly stimulus checks, and there's a lot of debate happening. Nothing concrete now. It's a lot of just speculation, so I won't get too much into it, but nothing is sealed yet as far as determination of if and when a fourth stimulus check is going to go out. But as soon as the news hits, we'll definitely be on that story for you. And let's wrap it up with this. Let's talk about what Jeff Gundlach has to say. He has to say, U.S. dominance to fade away in a dollar crash. He is predicting the demise of the dollar. Now, it's interesting. Once you take a look back at other fiat currencies that have failed, it's usually about a 50-year time span. And here we are in 2021, exactly 50 years from when we came off the gold standard in 71, right? What type of timing is that? That's insane, right? And we're starting to see now the parabolic move in money printing. And is this the end? Is 2021 exactly the 50-year mark from when we came off the gold standard? Is this the end? Is 2021 the end of the line for the dollar? If we see hyperinflation, that could spell the end, because confidence in the dollar is going to erode very, very rapidly across the world. Now, we're still over 60, just over 60% of world trade is still done in US dollars. So it's still the big player, but not by much. And this is out of the Wealth Advisor if you want to check out this article. But continue stacking, because eventually it's going to be unleashed. The gold and silver prices have been suppressed, in my opinion, and you're going to see an explosion, I think, this year sometime in 2021. Silver is already up over 70% in about a year now, and I think it's going to take a big, big run after this. So you might want to do your own research and hedge yourself accordingly, but keep stacking. I'm going to end this right here. Stay well, stay safe, stay prepared, everybody. Until next time, talk to you soon. Bye.